Good evening and welcome to New Money. I'm Bryan, and this evening we're talking investments, the opportunities, the risks and how to navigate them. With both global and South African markets having performed so well over the past 6 months, despite the brief blip on Trump's Liberation Day, many investors are asking, how is it that the Rand remains so strong against the dollar? And joining me this evening is David Shapiro, Chief Global Equity Strategist, who's going to make some sense of this. David, over to you. I mean, we've seen, and it can't, is it only dollar weakness?
It's very interesting. And I've tried to think this out in my own head because I can't make sense of it. But what my explanation is that there's the bond market, there's an equity market, and I don't think they cross. In other words, the equity market has been all the US, and one would imagine with the gains that we're seeing in the US that the dollar would remain strong. Yeah, even though you've had a gold price up and platinum, we've seen mining shares here. But I think the bond market takes a different path. And the bond market is driven by people who look for yield. And for them, it's easy to go into Euro bonds, into UK bonds, into South African bonds even, as well as US bonds. So the worry, the difference there, I think, dictates where they send their money. And from my point of view, that's what influences the currencies, not the equity markets, if I'm becoming clear. So don't look at the equity markets, look at the bond markets, look at those markets for guidance on where the currency goes.
Because nothing's happening in South Africa. You can't say our economy is improving. I mean, when you look at unemployment in South Africa, close to 40%. I mean, all different statistics.
Right.
I mean, we don't have money. South Africans don't have money. A small percentage do. The majority don't. Whereas if you look at unemployment globally, certainly in the first world countries, around about 5%. I mean, there's people who've got money to spend. So what is driving
money? There is money, and the bond market is very steady. No one's selling our long-dated bonds. They remain very steady. If you measure what you've said against our long rates are under 10%, which is an incredible achievement. And credit to our Treasury, credit to the Reserve Bank. And even in Europe, the rates there are probably, there's reasonable attractiveness there. So that's where the money's going and dictating where the currency is. But what you say about the currency, what you say about the economy is absolutely right. And Bryan, if you break down the JSE, and I'll come to exactly what you've said, if you break down the JSE, because you mentioned that our market is all at record highs, most of our market is dictated by businesses that don't do business in South Africa. Even Anglo Gold doesn't do business in South Africa. Goldfields, Naspers, ABN Bev, British American Tobacco, Richemont, all of those are foreign businesses. And those are the companies that have driven the JSE. If you go down into our banks and if you go down into our retailers, they've been nowhere.
And industrials, I mean.
They've been nowhere. Yeah. They've gone nowhere. So if you had to gauge the JSE on the performance of those, it's been flat to negative.
Yeah. So look, I did do that, and I took a basket of good industrials.
Yeah.
For the last 12 months.
Yeah.
Down 9.7%.
Yeah, there you are. Yeah.
Yeah.
So that's the misnomer of our market, or the misunderstanding. So it's the international stocks that have given us the kind of that's where you've invested. Pension funds are in those stocks that I mentioned, and they're doing well. But if you break it up into SA Inc., as you mentioned there, I didn't think it would be down as much as that, but that's interesting.
And Dave, if I gave you money today, are you going to South African market or are you going overseas?
No,
at these levels. Well, you've been talking for years at even higher levels.
I've got nothing against Richemont. I've got nothing against Naspers, which is Tencent. Very, very strong performers. And I'm still ambivalent about the gold market and the platinum market. But so there are companies that will do okay. But if you're going to invest in SA Inc., it's very tight. It's very, very difficult market in that. And you can see our economy is going backwards.
And David, do we have a floor for the Rand dollar?
I would imagine it's now. I like the dollar at these levels. The Rand at 1780, 1790, I think is a good time to move out. I'd be very surprised if we see significantly more weakness in the dollar.
Okay, so let's just talk about global now. Majority of markets driven by technology.
Yes.
Technology stocks. I know we'll talk about some other points there. The key question is, can these giant companies still continue to perform? I mean, we've got earnings season now. They'll all be reporting in the next couple of weeks.
Yeah.
I think the reporting from the banks have been reasonable.
Yeah.
I think they've been quite pleasant. Are you expecting good results?
Decent results. When we talk about tech, we look for anything from 10 to 15 to 20% growth, which is good off this very high base. But Bryan, it's still an AI tech-driven market, and it's going to remain like that for a number of years. So I try to explain it in the same kind of different highways. The one highway is a very slow highway, and that's because of high interest rates. It's dragging down global growth. And if it wasn't for ChatGPT in November 22, the second highway I'm talking about would be the same, it would be flat. But this has given us a whole new life. And the amount of money that's going into develop artificial intelligence and the technology around it, the infrastructure, is going to continue to drive US markets. The S&P is up for one reason only, and that's because of technology. TSM, which is not technically an American company, it's Taiwan, TSM, Taiwan Semiconductors, hit $1 trillion now. So it's the 10th company. It's bigger or just as big as Warren Buffett's Berkshire Hathaway. So that's where the drivers are. What's interesting and what I'm trying to find now is the smaller companies that are now going to start benefiting as we see this infrastructure develop and this whole theme take shape. But, Bryan, we're going to be talking about this as long as we're still around. There's still a few more years. We're going to keep talking about AI.
And Dave, were you surprised at the swift recovery in the market after the 2nd of April? Yeah. Do you think it's run too far?
No. It'll breathe. It'll rest. And I don't know if we'll continue to move look, we're only about, in the S&P, we're only about 6 or 7% up now. Remember, we came crashing down and we've recovered that. But I think the market's telling you, ignore tariffs, ignore the war. We'll settle 10, 15%, which is exactly what Trump's saying at the moment, and we'll get on with life. He's putting a lot of pressure on Powell to reduce rates there. I still think that the data that we're getting out at the moment still points to a delay in the U.S. reducing rate, meaning that the U.S. economy is quite strong. But that's just allowing steady markets, as we saw with the bank shares, which you mentioned. But wait for technology. Let's see what these companies start to produce.
David, so if we can achieve that, that means around about where we are now, come the end of the year, up a little bit, hopefully we will see some positive returns. Investors always like to see positive returns. But the question is, can you make sense of the potential outcomes of Trump's trade and fiscal policies?
No, I can't make any sense out of it.
I mean, have they imposed on us now a 30% tariff?
On South Africa? Yes.
So what's happened to AGOA?
Well, we're still trying to negotiate out of that. So we've got until, I think, the 1st of August, if I'm not mistaken. And a lot of talk is taking place. You know what, Bryan? I can't get a grip around this. I was looking at something over the weekend which gives the size, the rich countries, the poor countries. It was in The Economist, and it's worth looking at for everybody. You can go and see what the GDP per capita is. That's, in other words, the size of the economy divided by the number of people, population. I'm not going to go into too much detail, but you can see the rich nations like the US, which has the GDP per capita is like $84,000. We come down to Lesotho, it's under $1,000. And there's a 50% tariff on Lesotho, who make jeans, Wrangler and Levi, which goes into America.
How did that translate to South Africa?
Well, what I'm trying to say to you is that that's the kind of insanity around some of these tariffs. I mean, Lesotho is right on our border. It's very important for us. South Africa comes in at $6,000 GDP per capita.
$6,000 or rand?
Dollars, 6,200, which is 1/10 the size of the US. I mean, even Australia is 6 times bigger than South Africa. So it gives the size of the power of this economy. Why I bring in Lesotho is because I'm trying to explain tariffs. You know, sometimes it's insanity to go and impose this. Why bankrupt the country where the GDP per capita, in other words, what each person is earning, you could say the average salary of somebody who works in Lesotho is $1,000 a year. You know, I mean, it's just absolutely insane. So I think common sense will prevail, you know, with the Trump administration, and these tariffs will be lowered. No one can understand, you know, but I think the markets are saying, look, we don't understand what he's doing. Let's see through this. Sanity will prevail. We'll be okay.
Okay, so let's spend a little bit more time. We've got 2 minutes before the break. Let's spend some time on AI.
Yes.
You know, you talk about AI, who's going to benefit, how is it going to benefit, and how is it going to filter down to other companies that you may be considering to invest in?
Yeah, it's something that we don't know the full power of AI. Even in my own little world, I use AI almost all the time. In fact, I've replaced Google with AI. And I ask questions of which instantaneously I get answers. Yes, you've got to know what you're looking for, because sometimes the answers can be a little off beam. But Bryan, what we're doing at the moment is, and Jensen Huang explained it to President Trump, which changed his whole mind on manufacture. And in fact, there are a lot of articles now about the new manufacture. These data centers that they're building are almost data factories, which will enable companies to process their data a lot more efficiently. They'll become a lot more productive by using AI. In other words, save huge amounts and also know where they're going. So you're going to get huge efficiencies coming into the world that we know in every profession, from medical to legal to accounting to financial. Everything is changing, but you still have to build out this infrastructure, which is what we're seeing now. And the companies that can afford it are those with huge amounts of money, which we're seeing, the Amazons, the Microsofts, you know, even the Apples, even though it's stagnated a bit. So this is going to continue. Once we've got the infrastructure, then it's going to keep coming down. The value chain will start falling down to businesses, or to businesses that will teach you how to use it. But I mean, this is an enormous, enormous industry.
Okay, we may pick up in a moment, but let's take a break. Stay tuned. We'll be right back.